Political upheaval in the UK, more COVID deaths than in 2020, and an escalating tension on the Korean peninsula. Just some of the events that could happen in 2021 and have an impact on investment markets. I've received a briefing note today from Legal & General's Investment Management's Asset Allocation team with a list of some grey swans to consider for next year. What is a grey swan? Well, this builds on Nassim Taleb's notion of a black swan, which is an extremely unpredictable event where what happens is beyond the normal expectations of a situation and has potentially severe consequences. Grey swans then should be conceivably possible, if not necessarily probable. A grey swan is usually a geopolitical or macro financial event, but more to the left field of what normally happens. And it's an interesting list from LGIM, lots of food for thought as we rapidly approach the end of this year and start thinking ahead to what might be different in 2021. Hi everyone, I'm Martin Bamford, a chartered financial planner at Informed Choice. On this channel, I talk about personal finance, investing and happiness. I make these videos to help you become wealthier and happier. If that sounds like a great result, click on that little red subscribe button to become part of our subscriber community. It's completely free and you'll never miss an episode. Grey swans for 2021 then. I should start with a couple of important disclaimers. Firstly, these grey swans represent solely the investment views of LGIM's asset allocation team. Don't go doing anything silly as a result of watching this video. As always, it's for informational purposes only. This is not advice. Secondly, predictions should always be taken with a pinch of salt. Nobody has got a crystal ball when it comes to the investment markets. Trying to time the markets is a mug's game. If your investment strategy relies on luck, do not expect it to go particularly well. The best investors think about the long term, not what happens to the markets on a daily, weekly, monthly, or even yearly basis, but what happens over the course of decades. While it's great to think about what might happen in the short term, and 1 year as a time horizon is most definitely a short term, these sorts of predictions, which might or might not materialize, should never form the basis of your investment strategy. With those important disclaimers out of the way, let's take a look together at what LGIM's asset allocation team came up with in this briefing. Now, they start by talking about their predictions from last year, and I love their candid approach towards this because, like all of the people who made predictions at the end of 2019, some came true and some were way off, perhaps this year more than ever before. Thank you, COVID-19 pandemic. This time last year, LGIM identified top risks for 2020 as Argentina's default, the Democrats winning the US presidential election, and Hong Kong losing its special status with the US. So not bad so far, and they do note that with the exception of the political turmoil in Hong Kong, the impact of financial assets has actually been quite limited from these. They also gave credence to the idea that the UK would leave the EU with either no trade deal or a very basic trade deal. And as I record this on Tuesday evening, yep, that looks pretty spot on as well. We're still haggling over reductions in fishing rights among some other quite important factors. There is a bit more progress being made, but it is slow and the clock is ticking. On the plus side though, UK and EU negotiators have agreed to continue talking past the 1st of January transition deadline. Also high on LGIM's list for 2020 was the possibility of so-called helicopter money as an extreme fiscal stimulus measure. Now, we've not seen actual helicopter money in the UK, at least not yet, but many of the government's financial support measures look a lot like helicopter money, so furlough schemes, for example. Anyone taking advantage of those? What about the pandemic then? The big one for 2020. LGIM had this on their long list because pandemics are often flagged in tail risk prediction exercises. They also spotted the risk to markets from the pandemic quite early in the year, taking out risk management positions in January and then into February to protect against possible impacts of this virus as it started to spread beyond China. But they admit to having underestimated the depth of the impact it would have on society and on the markets by the end of March, as many investors did. And they say with the benefit of hindsight, their actions were too little and too early. The note says, the events of the first quarter challenged our previous philosophy that constant and expensive tail risk hedging is not a viable solution for portfolios. That view has now become more nuanced. While we believe that tail risk management should still be targeted to the real or outsized risks faced by any portfolio or client, we have evolved our commitments to researching such strategies with a lower cost of carry or performance drag. We believe that some collection of these positions can become more structural in nature, even if the components or underlying trades are more dynamically managed. Another admission in this briefing is that they remained cautious on the markets, economy and virus for too long over the summer, an opportunity missed in what turned out to be a very strong second half of the year. So that's the past. What about the future? LGIM turned their attention to this new strain of COVID-19, which is already running rampant in London and the southeast of England. It's prompting more restrictive measures. And they say the virus is likely to dominate the headlines for many months to come. But they are optimistic about the rollout of vaccines, allowing for a broad reopening of the economy reasonably soon too. They see some tail risk to that optimism, despite it being a sensible base case. It's not inconceivable that the total number of deaths attributed to COVID-19 will actually be higher in 2021 than it was for 2020. And those deaths could come predominantly from emerging markets where the vaccine rollout is likely to be slower. They also don't rule out a third national lockdown in the UK, especially if vaccine distribution cannot meet its rather optimistic targets. I think we are pretty much on track for a third national lockdown. We've effectively got one already, haven't we, in the large parts of London and the southeast, as well as for the whole of Wales. And there are lots of indications coming through right now that secondary schools will not be returning at the start of January, with this early mass testing plan for pupils now looking impossible, quite frankly, to deliver. In terms of UK politics, this looks set for more potential upheaval. According to betting markets, there is a 35% chance that Boris will not be Prime Minister still in the next year. And there's also a reasonable prospect of another Scottish independence referendum. Also, in the political spectrum, our relationship with the EU will draw headlines. LGIM think that UK assets remain sensitive to these developments, but they see more upside potential than downside risk and therefore take tactically positive views on the pound. Outside of the UK, US-China relations are still the main geopolitical dynamic that's likely to shape the next decade, not just 2021. They think this subject will come back into focus for investors once the pandemic has passed, but the path to escalation or even physical confrontation between the US and China should not be ruled out. Another tail risk in the Asia-Pacific region is the possibility of escalating tension on the Korean peninsula, but reunification talks are also a possibility. Some seriously interesting thoughts here from LGIM. They finished by sharing 10 more Grey Swans to consider for 2021, starting with the Hong Kong dollar breaking its peg against the US dollar. That was first established in 1983. We heard earlier in the year that Donald Trump's top advisors were considering proposals to strike against the Hong Kong dollar peg, but analysts concluded that the US was essentially almost toothless in hurting the peg. Banning Hong Kong from buying US dollars would be a nuclear option, doing significant damage to global financial markets, including those in the US. If it happened, it would be a huge move, but it's a bit like the US pressing the self-destruct button. And a transition from the Trump to the Biden administration could cool tensions with China next year. We'll have to wait and see on that one. Number two is that central bank-sponsored cryptocurrency goes mainstream, cratering Bitcoin. Yes, I can absolutely see that happening, and I know that Bitcoin fanboys are going to hate me for saying it. We know that central banks have their own cryptocurrencies in development. Assuming they meet the right standard of security, they could blow the likes of Bitcoin out of the water. Let me know in the comments below what you think of this particular one. Grey Swan number three is that various new medicines or vaccines are developed for existing illnesses as a result of COVID-19 research. These could include a possible cure for the common cold and significant improvements in the fight against cancer. And that would be a fantastic and a surprising outcome from this pandemic, wouldn't it? What if the consequence of COVID is that we actually improve our life expectancy? Wouldn't that make the economic and social damage all worth it at the end of the day? I like this Grey Swan because the way the Pfizer-BioNTech vaccine and a few others have been developed this year using messenger RNA technology is just incredible. And the speed at which it's been developed too is really, really incredible. Let's keep in mind that any delay in rolling out the vaccine was down to safety testing and regulatory approval. It was not about the creation of the vaccine itself. That was done many, many months ago. We've got 2021 as the warmest year on record as a Grey Swan. Unfortunately, that one's not really a Grey Swan, as the last 5 years have been the warmest 5 on record. I've been out for a walk by the river this afternoon wearing shorts. It's mild, it's late December, climate change is here already. And I think it's here to stay, sadly. Which leads us into Grey Swan number 5. Extreme weather events lead to poor harvests, shortages and food price inflation. High food inflation feeds social unrest in various countries, spooking markets and upsetting the consensus trade of long emerging market equities. Now look, I can get on board with that one too, and I think an interesting long-term investment theme to consider is sustainable food development. Grey Swan number 6, Brazil or Turkey default on their foreign bonds. Brazil's long-term foreign currency issuer default rating from Fitch is currently at BB- with a negative outlook. According to Fitch, Brazil has high and rising government indebtedness, a rigid fiscal structure, weak economic growth potential and a difficult political landscape that hampers timely progress on fiscal and economic returns. And Turkey is in pretty poor shape too. Back in August, Fitch Ratings revised the outlook on Turkey's long-term issuer default ratings to negative from stable and affirmed them at BB- again. Fitch commented at the time, political pressures, the limited independence of the Central Bank of the Republic of Turkey, and a track record of being slow to respond to events increase the risk that policy is tightened insufficiently, contributing to further external imbalances, market instability, and a more disorderly adjustment. Grey Swan number 7, Putin retires, creating a buying opportunity for the Russian ruble. I don't have a whole lot to say about this one, but I suspect the world would be a better place once Putin is out of the picture. Number 8, autonomous driving finally hits the big time with a broad introduction in a major city. Now, I am fully on board with this one. An interesting consequence of widespread adoption of autonomous vehicles is what it could do to house prices. This is my opinion now, not LGIM's. I think it could flatten out house prices across the UK, reducing prices in London and in other cities, and increasing prices in more attractive parts of the country, in the countryside by the coast. If you can jump in your autonomous car in the morning and have it drive you to the office while you get a bit more sleep or do some work, why on earth would you pay a premium to live in the city? And of course, our living and working habits have changed beyond recognition this year throughout the pandemic too, so that will also have a factor. Grey Swan number 9, long-lasting broad social unrest in the US in major cities, causing a correction in the S&P and US bond yields to fall below zero. US society still seems to carry an awful lot of tension after this summer, and following the still disputed, at least on some parts of Trump supporters, US presidential elections, these people have got a lot of guns. That's all I'll say about that one. And then Grey Swan number 10, the Pope announces the Catholic Church will allow married and female priests into their clergy. I've no idea what impact, if any, that would have on global financial markets. If you know, think you know, let me know in the comments below. But thank you very much to LGIM's asset allocation team for that briefing. I get a lot of these passed across my desk on a daily basis. Would you find it useful to hear about more of them, along with my take on what they could mean? I'm very happy to create more videos like this in the future. Just let me know. Would you like to receive a short email from me in your inbox every Wednesday from the new year onwards? Head along to sendfox.com/Bamford to register for midweek money. It's my new weekly roundup of personal finance news and tips, and it's completely free, no obligation, no spamming. Sendfox.com/Bamford to sign up now. Until next time, thank you for watching. I'm Nassim Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.